Gentlemen, good day and welcome to Aarti Pharmalabs Limited Q3 and 9 months FY'24 earnings conference call hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Singhania from Valorum Advisors. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone, and a very warm welcome to you all. I am Sumit from Valorum Advisors. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us today Mr. Rashesh Gogri, Chairman, Mrs. Hetal Gogri-Gala, Vice Chairman and Managing Director, Mr. Piyush Lakhani, Chief Financial Officer. Without further delay, I request Mr. Rashesh Gogri to start his opening remark. Thank you, and over to you, sir.
Thank you. Good evening. We welcome all the analysts and investors to this call on the FY'24 Quarter 3 performance of Aarti Pharmalabs. I will start the discussion with key business highlights. Businesses. As company operates in three distinct areas within the pharmaceutical industry, API and intermediates, CDMO, CMO, and xanthine and intermediates. The company is actively engaged in production and sales of API-related intermediates and adhering to regulatory standards as the primary focus is on selling in the regulated markets. For Q3, the share of regulated market was 53% of the sales in this segment. In CDMO CMO business, strong scale-up and commercial manufacturing expertise of over 2 decades is helping us enhance our customer confidence in us. And for Q3, the revenue share of CDMO CMO business stood at 14.2%. We have added 1 new customer, 3 new commercial products, and 6 new R&D products in this segment. Let me now cover the key financial highlights for Q3 FY'24. I am pleased to announce that in Q3 financial year 24, we have recorded the highest ever EBITDA and the net profit till date. In absolute terms, the EBITDA stood at 97 crores. On the quarter-on-quarter basis, the consolidated revenue increased by about 2% to 448 crores, whereas EBIT increased by 10% to 78 crores against the previous quarter EBIT of 71 crores. Consolidated PAT stood at 53 crores, marginally higher over the previous quarter. The consolidated EPS for the quarter gone by was 5.82 per share. The board has approved an interim dividend of 2 rupees per share in the just concluded meeting yesterday. Let me now share update on ongoing expansion projects. The Greenfield expansion project at Atali, Gujarat continues to remain on track and with the expected completion targeted in H2 of FY'25. The project to manufacture primary raw material of xanthine is expected to begin in this quarter, thereby limiting our import dependency. The semi-commercial production block at our USFDA intermediate manufacturing site in Vapi to cater to smaller batch size requirements is aiming for completion in Q2 of FY'25. In addition to above, the company is planning to further expand xanthine capacity over next 15 to 18 months. All these efforts signify our commitment to growth, self-reliance, and catering to diverse client needs. With the current stable demand outlook, we expect to have an EBITDA growth of approximately 8 to 10% in FY'24 and remain well positioned to achieve our long-term goal of 12 to 17% annual growth in next 2 to 3 years. We believe that Indian and global pharmaceutical industry is poised for sustained growth, and we aim to continuously improve our performance by leveraging our strong research and development capacities. We envision ourselves fortifying our leading position in xanthine segment of the business. In API CDMO segment, we plan to strengthen our position by introducing more value-added products and acquiring new customers. This will help us solidify our position in the market, creating long-term value for all our stakeholders. I will now request moderator to open the forum for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Banthia from Girik Capital. Please go ahead.
Hi, good evening. Am I audible?
Yeah.
Yeah. So, just a couple of questions. First, we can see a big jump in the gross margins in this quarter. So, can you please elaborate? Can you break down the gross margin expansion reasons?
Yeah, as you will see that, we had higher percentage export and our CDMO, CMO business has also expanded, and both of these have resulted into overall margin expansion in our business.
Okay, so, and the xanthine RM project was supposed to be commissioned in this quarter, so in Q3, so that did not been pushed to Q4, right?
Yeah, that has got pushed to Q4. But however, we are able to buy at a similar price range from alternate suppliers. So that doesn't have any cost impact on our xanthine production cost.
Okay, so even when the project comes on stream, we can see a similar kind of gross margin, not a big expansion from these levels, right?
Yeah. That project is mostly from a standpoint of supply security.
Okay.
And Indianization of the raw materials.
Okay.
So that the import dependence goes away.
Okay, got it. And last question on my part was, is there any change in the theophylline realizations? Because I've seen from the export data, realization seems to have gone up quite a bit for theophylline, aminophylline, and that other bronchodilators category. So, are you seeing anything on that front?
No, it is at a more or less a similar level, and mainly aminophylline and theophylline margins realization has been pressurized as a similar level to the capping pricing.
Okay. Got it. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. And good to see the ramp up on the CMO and CDMO side. But, we have seen a significant jump in, CDMO segment in this quarter, and our product basket, both on commercialized molecules as well as under development molecules, has increased considerably. And we've also added one new customer. So the ramp up in the CDMO that we have seen in the last quarter, is it sustainable? Do you think, the traction that we have seen in CDMO segment is expected to continue going forward as well?
Yeah, we expect the ramp up, of these projects continuing. As you see now, we have a basket of more than 39 products that we are dealing with our 16 customers, and they are at various phases of development, and some are commercial also. So depending on their plans and the approvals that they get, these products will become commercialized, and provided they pass their clinical research and launch this product. So on that basis, we will have a visibility of these products in the future.
So, but do you have good visibility on the products which are already commercialized, which are already launched and passed? All the three.
That's why we are saying that we have a good conviction that we will be able to grow the current business of CDMO CMO in the future.
Sure. And sir, given this, the segment is in last quarter contributed 14% of our overall revenue. Do you think over the next, with the given visibility that we have, this segment can become 25-30% of our overall revenue in the next 2 to 3 years?
Next 2 to 3 years, it has a chance to become 20 to 25% of the total revenue, or even bigger, because it depends on how the products are commercializing at the customer end. Depending on that, we will have more visibility. But I think going forward, we see this number to at least breach this 20% mark and go above it.
Sure. And then on the API and intermediate side, generic API and intermediate side, how is that segment doing? There have been pressures on the pricing front. So how is that pressure staying?
Sorry to interrupt. You're sounding a bit muffled. Is it possible to use the handset mode in case if you're using the speaker
Sure.
mode?
Is it better now? Is it better?
Yes, sir.
On the API and intermediate side, how is the demand scenario currently? We had been, the industry had been facing some challenges on the pricing side as well as demand. So how is the segment doing for us, and what is the outlook for the segment for the FY'25 and FY'26?
Yeah, basically in API and intermediate segment, in API, if I particularly mention, the company operates in the steroids and anti-cancer segment along with the lifestyle drugs. And in these products segment, we are feeling stable to, good demand. And though there is a little bit of compression on pricing overall due to overall competition, but I think since we operate largely on the regulated market and export market, we are quite, okay with this business and growth potential of this.
Okay, so can we expect, 15-20% kind of revenue growth in the segment in the next 2 years?
Yeah, it depends on the new launches and how our partners are becoming successful in future. So we expect definitely this business to grow. The absolute number can be 10% also. Yeah, in that range.
Okay. And the last question was on the Xanthine side. How is the pricing scenario now? I think last quarter also, it seems that we have seen some pressure on pricing. So where do you see the pricing pressure ending, and what is the outlook for the sector or for the segment for us?
Yeah, overall, we have seen Xanthine segment pricing pressure. But, we have been aided by lower raw material costs also. So ultimately, pricing pressure is there, but margin pressure is not as much as the pricing pressure overall. We feel that I think all the China-based dumping of these kind of products also that we are seeing in other APIs will eventually end in next couple of quarters. This can't continue because everything is becoming quite challenging.
So,
Okay.
Thank you, and wish you all the best. Thank you so much.
Thank you. The next question is from the line of Rishali Shah from Unifi Investment Management. Please go ahead.
Hello. Congratulations on the set of numbers. I have 2 questions. First is on Xanthine segment. So it was earlier mentioned that we hold 15 to 20% share in the segment, and then there is one Germany player almost equal to us and Chinese players which are larger. So it appears as if Xanthine is a very consolidated market. So how do we expect growth there? Is it incremental opportunity coming in the industry which will lead to growth, or am I missing on something in case of industry growth?
As you see that the overall market of the xanthan derivatives is growing, and particularly it is growing significantly in Indian subcontinent, and that is resulting in overall growth of the business. The customers that we are focusing on are convinced about our ability to partner with them for their growth, and that's how we are seeing larger allocations to us for future demand from them.
Any particular factor leading to this kind of growth, or is it just the trend evolving?
Yes, so xanthan is essentially caffeine and other products, and there is a lot of demand of this kind of drinks and other food application, which is increasing overall usage in particularly Asia and Indian subcontinent.
Okay, that answers it. Thank you. Another question was on CDMO, CMO front. So as we saw the sharp rise of around 700 basis points, that is from 7.2% to 14.2%. So what led to this kind of growth?
I think
so we had customer. See, in the CDMO, CMO place, we have customer orders, and we had significant orders which got dispatched in this current quarter that we are reviewing. So which resulted in growth of sales.
Also, if you can bifurcate the margins into these three segments. We already had you already had mentioned that CDMO, CMO is the margin accretive business. So if you can just bifurcate margins as of how much contribution is of xanthan segment, how much is of our CDMO, and how much of API.
Currently we are not giving this bifurcation of margins, and probably later on from next year onwards we will give you the bifurcated margins, because the assets are common that we are utilizing for API intermediate and CDMO, CMO. So it's little bit trickier to give this breakup.
Okay, no problem. Thank you so much.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Am I audible?
Yes.
Yeah, so as we have indicated in this call as well as in the past that the margins in the CMO and CDMO segment are higher than our overall company margins compared to xanthan as well as API intermediates. So with the proportion of the segment increasing, do you think our overall margins can be like 20-21% over the next 2 to 3 years?
See, margin percentage is pricing also. There are two factors which have led to higher margins in this quarter. Of course, we focus more on absolute growth, but lower price of xanthan derivatives is also factored in overall because the absolute margin compression has not happened, but the overall pricing has come down. So that has resulted in terms of percentage increase.
Sure. Okay, got it. Yeah. And sir, on the volume side on xanthan, in the 9 months, have we seen growth in the overall volumes? And if you can broadly give an indication how much has been the growth in volumes in xanthan.
So growth over last year has been around 25% YTD, if you compare YTD of last year and this year. So we have done a growth of close to 20%.
Okay, that's commendable. Okay. Thanks and wish you all the best. Thank you.
Thank you very much. Rajesh sir, I am able to hear a lot of background noise coming from your background, sir.
No, so it is not from my end.
Participants.
Hello. Piyush?
So the line for Piyush sir has been cut. Should I take the next question and connect him?
Yes.
So the next question is from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, good evening, everyone. So Rajesh, my first question is, on the xanthan side. In the xanthine, we are indicating that, in couple of quarters, the China dumping, like all other APIs, may stop and prices may again kind of move up. So, given that, and I understand you do annual contracts for xanthine for most of your large customers. So how does it work? You revise it somewhere, middle of the year, or you go through with the same pricing, and then next year only the prices get revised. So how does it work?
Yeah, so, all our 100% quantity is not on an annual pricing. So we have a mixture of quarterly pricing, annual pricing, and spot pricing. So it's a mixture. However, significant portion is on the annual pricing, and that gets reset every year.
Okay. So that is at the start of the financial year or calendar year?
That is too much of detail to share.
Yeah.
Okay. So second question is, I think we have given that 12 to 17% EBITDA growth guidance. So I think at that point in time when we were discussing on the call, one of the thing was that the xanthine realization are likely to come under pressure. Now, from here on, if the xanthine realization again comes back and we remain backward integrated, do we see any upside potential to what we have said?
No, we have a wide range, 12 to 17, so I think we'll still fit in that range, even though there is a uptick in, and there is a lot of dependency on our partner's success for the projects for which, the launch will happen. So we have series of launch which will happen in 24, 25. So with that, intermediates as well as API, how they fare and how a partner fares, that will determine the overall margin profile and absolute number on our project. But in terms of xanthine, we will have another 7 to 8% increase in quantities, that further some debottlenecking will happen starting next fiscal. And so that will complete our current debottlenecking program that we started last year. And we further plan to do one more round of debottlenecking by further investment, and we are still working on that. So once we have firm details, we will get back to you in the next call.
Okay. And what is the total capex that we are likely to have in FY'25, both Attali and xanthine expansion put together?
So overall, there are several projects which are undertaken. So I think in Attali we have announced total capex of 375 crores, and then there is a solar project where we are doing a 90 crore capex. And then this xanthine capex number is still being worked out. So all in all, everything largely will get spent in 24-25.
Okay.
So over next 12 to 18 months, we are looking at somewhere in the region of between 400 to 500 crores of capex.
Okay. And out of that, 90 crore is for the solar, rest is for the processes and increasing the capacity, right?
Yes.
Right. And we can assume around 2 times asset turn on whatever capex that will be.
Solar is going to be not adding anything.
Not solar. I'm excluding the solar part. So I'm saying for the process part and the API and CDM part.
Yes.
Okay. Got it. Thank you. That's it.
Thank you. Participants may press star and 1 to join the question queue. The next question is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, thank you for taking my question. First question is on gross margin. So this quarter, the number of 46% is a lot higher than our usual 41-42. Now, you explained the reasons, but is this a sustainable number? And also, can you bifurcate the impact of product mix and lower RM prices, export, etc.?
This 46% number is definitely due to the lower, sales price and lower raw material cost percentage. plus improved margin due to exports and CDMO, CMO segment. So all three have contributed to this, and I think we will have to really work on that number. But however, we are looking at absolute number increase and how we are able to get this absolute number to grow as a percentage. So that is where the company is focusing more rather than this percentage.
Understood, sir. Second question is on API and intermediates. So you have given a pie chart, right? Basis that it seems like the revenue from API intermediates has gone down a little bit in Q3. So have you diverted some of your capacity, API capacities towards the CMO and CDMO?
Yeah. We have diverted some of our capacity of intermediates for CDMO, CMO utilization. Yeah.
And so you have committed a capex of nearly 270 CR in FY'23 and H1 of FY'24, right? Including the new Tarapur API block and the hydrogenation reactors, etc. Now, its impact is still not visible in our top line. So, when will it start getting reflected in the top line? And also related to that, if you can share some details on Atali ramp-up, right? What is the peak revenue potential, expected utilization, etc.?
Yeah, so regarding this earlier expansion of hydrogenation as well as the new API block, I think now we have onboarded most of the customers on this newer block, and we ultimately have to look at consolidated API capacity availability. And what has happened is that we have moved our larger products to this newer block, and we have emptied out our capacity of multipurpose block. So overall, this ramp up is going to happen over next 2 to 3 years, and then we will get these API capacities getting fully occupied. Whereas in case of Atali, it's a very large land parcel that we have, where we have almost 80 acres of land, and we have only started first phase of Atali, where we are doing this 375 crore, out of which the infrastructure cost itself is going to be 125 crores, and balance is going to be spent on the blocks as well as the utility, etc., for that particular block that we are going to utilize. So overall, that ramp up will happen slowly initially, but ultimately we will put up more and more blocks at that site, because we have space to almost put 12 to 15 blocks in that particular site that we are developing. So every year we can put one block depending on our customers' growth, and we don't have to change the sites.
Got it. Any targets on capacity utilization, revenue potential, etc., for FY'25, 6, FY'27?
See, our endeavor is to do more than 1x, 1.2 kind of x of over net fixed asset. But, we have to completely do the more product mix and manufacture more value-added products to achieve this number.
Got it, sir. A couple of more questions. R&D spend, what will it be for FY'24, and also FY'24? What's going to be the total capex?
Piyush. So R&D normally, our run rate is about 10 to 11 crores per quarter. So we'll spend almost about same amount that we spent in 22-23, which is about 40 crores of gross R&D spend. And capex, we have spent about 40 crores so far in H1, and we will be capitalizing. So we have 102 crores of WIP. So basically, the capex number for this year would be about 150 crores or so, excluding R&D.
And the number of 400 to 500 CR you mentioned is in addition to this 100 CR of CWIP, right? This is fresh 100 CR. Oh, 400 CR.
Yeah. So, but some of this would be spent in 24, this financial year itself.
25 and 24 last quarter also. So in 15 months we will spend this 500 crores.
Understood. So last question from my side on the xanthine segment. I just want to understand the market dynamics better. So can you help me explain the entry barriers in xanthine, right? Do you expect any sort of large capacities coming up in India or globally in the medium term? And also, if the market is attractive in the Asian subcontinent, what stops other players setting up capacities in India or in, let's say, other China or elsewhere?
No, so as you know that overall the xanthine market has seen pressure on pricing and margins currently. So for any new player to enter and create this kind of market is become difficult to get to the scale at which we are operating. And also there are regulatory approvals and qualification requirement with large customers where it takes time for any new entrant to get qualified and all that. So that is the entry barrier that we have in this segment. And that is what will deter other competitors from entering into this segment. So now, from last year, this year, it has become more difficult because overall other spot customers and those markets have also, pricing has become more challenging.
And also we can offer 100% India, China, with cyanoacetic acid or intermediate.
Sorry to interrupt, ma'am. We are not able to hear you properly. You're sounding.
Yeah. So what she is trying to say is that we are giving our customers India-only product advantage, so that there is no Chinese element in our product. So that is the advantage that people if there is any competitor from China, it will not get entertained as much as we get entertained from India as a supplier.
Sure. Thanks for the answers. I'll get back to it.
Thank you.
Thank you. The next question is from the line of Mr. Vikas Sharda from Anti-Asset Management. Please go ahead.
Good evening, everyone. I just wanted to confirm one fact which you mentioned earlier, that the volume growth for the 9 months was around 20%. There was some background noise, so I couldn't get the number clearly.
20% on xanthine segment.
Yes. Okay. And secondly, on the CDMO side, so the levels at which you are, say, this quarter, would you expect that to remain more or less stable going forward for the next few quarters, or would you see a very high volatility?
Yeah, CDMO, quarter to quarter, we can't give the guidance. But however, on an annualized basis, we are pretty confident of growing the current segment. Last year, we did almost close to 95 to 100 crore. This year, we have crossed that number, and we are near last year's number. And this one quarter, we will be doing another round of sales to our customer. And going forward,
yes,
we expect growth to continue at say 40% or 50% annualized.
Understand. And what would be the nature of these products like? It's more like commercial launches of the products, or like still in the R&D stage?
Yeah, so we have 19 products which are in commercial, 20 products at R&D stage. So of course, R&D stage share in revenue is not is very hardly anything. But currently, the products which we have been working with our 16 clients are more aware. The numbers are showing up from few products which have been either their validation quantities or commercial launch.
Perfect. Thank you very much, and all the best for the future.
Thank you. The next question is from the line of Basmeet Nayak from RW Advisors. Please go ahead.
Thanks. Sir, what do you see on ground that you believe China dumping would be over in the next 2 quarters?
We feel that overall in the chemical segment and other segment also, the overall, I think pricing and sustainability of China at this lower pricing has ended in certain product segment in chemicals, and I think the same will continue in pharma also, because once the chemical prices start moving up, which we have seen in China, the API prices also will slowly start mirroring that.
Understood. Sir, and on annualized guidance, I could not hear it properly. CDMO is expected to grow at 20-25% as a segment every year.
CDMO next year we will grow faster. So we are anticipating 40 to 50% growth over this year in CDMO-CMO segment.
Okay. And sir, on gross margin at least, can you give us a sense of how better CDMO or CMO or better compared to company gross margin on an annualized level at least?
Yeah, so basically gross margin currently, we were at 41%, now we are at 46%, but on the CDMO-CMO side, I think our gross margin is in excess of 50% in most of our products that we do. However, as the product will become more and more commercial and the quantities will ramp up, I think those margins also will rationalize going forward. But however, it will get compensated by absolute quantity increase and absolute number increase. So it's a balancing number. It depends on in which place the products are and how we are doing. So if I do of a campaign of innovator every year, so then the margins can't be 50% or plus of 50%, but initial launch batches or those can be higher.
Understood. And sir, this capex of 400 odd crore X of solar, which we want to do in the next 15 to 18 months, so the commissioning of it should be expected around Q1 FY'26?
Yeah, see, we have guided H2 FY'25. Maybe, that would be the... So basically we will have in the next 15 months, the projects will start operating.
Understood. Thank you. All the best.
Thank you. The next question is from the line of Twanil Desai from Turtle Capital. Please go ahead.
Sir, one clarification. So in the business vertical split that you have given, that is for the standalone number or for this quarter or 9 months, or is it for Concall numbers? Standalone for the quarter, right? For the quarter. Yeah. So, sir, my question is that, if I look at the API and intermediate segment, if I look at the overall numbers, we are close to 500-550 crore in that segment. And given that we have such a good customer base and very good products, and we have 13 new APIs under development, all regulatory approvals across various countries. So, can we grow this business at 18-20%? And if not, what are the restricting factors for us to grow this business at that rate?
Yeah, so globally, API business for newer generic launches has seen a lot of pricing pressure on day one launch and also subsequently. So there's a lot of pricing pressure which is there on these launched new APIs. However, the advantage that our company has is that, we are backward integrated and we have our own multi-stage synthesis that we carry out for these APIs, which make us, position our product differently than other players of API. So, basically, absolute number increase is one thing, but what we are trying to do is how we can grow the margins, absolute margins, because the assets which we are using for API, we are not using for any other uses. So how we can do more absolute contribution in this manufacturing asset is what is our goal.
Okay. But is it safe to assume that your volume growth could be, in that 15-20% range, just the realization pressure because of which the growth may be tad lower?
Yeah, I think those numbers, we can guide for absolute EBITDA increase that we plan. But however, these top line numbers are ultimately bit, because if you see, we have not increased our top line over last year, but however, the EBITDA and other numbers have shown increase.
And one more question, sir. I think we had given earlier that 10 to 15% EBITDA guidance in terms of improvement over FY'23. Now we are saying 8 to 10%. So is that largely because of the Xanthine market changes or anything else which kind of is slightly different than what we had anticipated?
Yeah, I think you're right that we have tad lowered our absolute growth. As we pass quarter on quarter, we have more surety on what number we are going to achieve. And, we are at this number. We are seeing some postponement of orders of certain projects also, which have resulted in moving this sales to next financial year. So both these results would result in tad lowering of this EBIT growth.
Okay. Just one small correction. The earlier target was 10 to 12, not 10 to 15.
10 to 12. Okay. Got it. Thank you. That's it from my side.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Participants may press star and 1 to ask a question. Participants may press star and 1 to ask a question. The next question is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, so my question is on Atali. We are committing significant capex, right? 375 CR in the next year. So is this more from a longer term growth point of view, or are you also seeing some near term visibility driven by customer orders, etc.?
Yeah, it is more from overall growth perspective. I think it's a large manufacturing site that we are trying to put because we would like to consolidate our place where we do further expansion, because the regulated customers and innovators don't like us to shift the sites from one side to other side. And so from that perspective, we have taken a bet on putting up this very large manufacturing site, and it will have, I think, multiple phases of newer capexes that we will do at this site. So current phase 1 includes the infra spend as well as 2 large blocks, that we are constructing there as part of this current phase of expansion. And we will have all the permissions and land and everything to do further expansion also there, which can come up every year as additional blocks. So that is a strategy. So there we can, longer term, we would have one site which will give us consolidated control over our expansion.
Got it. And so are we also adding some new capabilities, let's say chemistry capabilities or newer kind of products in Atali site?
Yeah, overall in the new R&D center that we have started, we are looking at doing more peptides and flow chemistry as well as the newer reactions and newer chemistry we would like to add. And once we, form our R&D capabilities, I think in the future projects we will see more such production capabilities coming into Atali.
Got it. Finally, on the 90 CR capex on solar side, will it help us help reduce our energy costs in any way?
Yeah, Piyush, you want?
So, the cost increase that we are looking at is about 6 to 7 rupees per unit. So currently, in Tarapur, the per unit cost of electricity is almost, 10 rupees. So, there is definitely going to be a savings. And we are consuming about 20 lakh units on an average per month.
Yeah.
So roughly 10 CR of annual saving.
No,
it will be more than that.
Yeah.
Okay. Got it. Thanks. That's all from my side.
Thank you. The next question is from the line of Krishna from Capital Mind. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Hi. So my question is regarding xanthine pricing pressure. So are we at the fag end of the pricing pressure, or do you think how long can we expect for the pricing to come back to its previous level? That's one question. Second question is you mentioned that EBITDA, we are expecting 8 to 10% growth, right? So that's for next year, next quarter, or next financial year? So these two questions, sir, from my side.
Yeah. So overall, I think xanthine pricing pressure will end in. We anticipate it will continue till middle of next year. And in terms of the growth, that we will end FY'24 with 8 to 10% EBITDA growth, and for future next 2 to 3 years, you can anticipate 12 to 17% annual growth of EBITDA.
Okay, so this 8 to 10% is for next year.
This year. When next quarter.
Next quarter only. Okay. Got it.
All combined.
So 23-24 overall, compared to 22-23.
Okay. And then from 25 onwards, we can expect 12 to 17% for next 2 years, till 27.
Yeah, 3 years.
Sounds good. Okay, sir, that's it from my side. Thank you.
Thank you. The next question is from the line of Bharat from Neomile Capital. Please go ahead.
Hello, am I audible?
Yes, sir. You're audible.
Yeah. So thank you for taking my question. I just wanted to ask, how do you plan to fund your capex within the next 2 years? Like, it's 4 to 500 crores. So how do you plan to fund it?
It will be a mix of both, internal accruals as well as borrowings. So, if you can see our debt equity is, we are quite well placed, and if you see the business opportunity also, we are in a much quite good place to basically expand on the capabilities as well as the future that we have. So we think that that kind of capex is really put in a much better place, and we'll fund it through internal accruals as well as some sort of borrowing. But we will keep a tab of where we want to be in terms of debt equity. So our target is between we want to be between 0.3, 0.35.
Okay. Thank you. That's all.
Thank you. Participants may press star and 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
We thank you everyone for taking their time to join us for our Q3 FY'24 earning call. Hope we have addressed all your queries. If you have any further questions, please feel free to contact our investor relations team, and they will revert back on the same. We look forward to connecting you together again next quarter. Wish you good evening and bye for now. Thank you.
Thank you. On behalf of Aarti Pharmalabs Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.